Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge to say the least. That's why Growmark FS and their specialists and their team are able to bring you the latest innovations for your agricultural operation. FS specialists are continuously getting training, and they are doing their best to bring you the latest innovation and technologies. Learn more by visiting fssystem.com to get the latest that FS and Growmark has to offer you. That's fssystem.com. And welcome into Market Talk for this Wednesday, May 19th. A good afternoon to you. I am your host, Jesse Allen. Great to have you here with us. MarketTalkAg.com. That is our home on the web. MarketTalkAg.com. That's where you can find us, all of our social media links and much more. It's all on the website. You can find all of our streaming sources, our great radio affiliates, and much more, all online. MarketTalkAg.com. Well, a broad sell-off day in the markets. Got a lot to talk about and touch on. Let's bring in our good friend Mike Zuzolo with Global Commodity Analytics joining us here this afternoon. And Mike, great to catch up with you as always. And again, just overall a broad sell-off, kind of a risk-off day. But the corn market surprised us there at the end and kind of rallied back. I think that's a good place to start, Mike.
Yeah, in fact, you being in Nashville maybe rings true. I had a client call and said, "What do you think?" And I said, "I think Johnny Cash is in charge." And he said, "What do you mean by that?" And I said, "We're going down in a burning ring of fire." So that's what I sang. That's what I sang to some clients today to try and alleviate their concerns. The corn market had a really nice piece of news at the beginning of the day and at the end of the day. And so it bookended the trading day with the corn. And we noticed the overnight high of 663 in the front end July was only about 2 cents away by the time we closed the day off. Biggest news to me, and they're related, is that China came in once again, took in almost 1.4 million tons of new crop U.S. corn. The numbers stack up to this way, Jesse, at this point in corn. We're up to about 12 million tons, a little shy of that in export sales to China. That's going to be almost a full fifth of USDA's total number. So what I've been talking to clients about is the idea, look, we have less competition in Brazil, and we've got China buying. And other than the wheat, we've got very strong demand for ethanol and very strong demand for livestock. But other than the wheat, corn is really good. It's just I don't want the corn to go up too high too fast. This chart we're looking at right now is an overlay. You've seen this before if you watched the Market Talk with us before. But the 2012 December corn is what we're looking at against the 2021 in purple. And it's really neat, Jesse, because we had been trading very similarly to 2012 in this current marketing year until about a month ago. And then we just went straight up the flagpole, led by a bunch of other commodities. And we actually, 2021 corn actually got up to levels not seen since 2008. That got me nervous. Now that we've cooled off and gone back to the 2012 model or 2012 similarity, I do feel like this is a really healthy correction because China's buying. And one of the big reasons they're buying is because AgroConsult came out at the end of today and talked about a corn crop in Brazil no better than 91 million tons. You're talking about 11 million less than what we just got from USDA, and that was after a 7 million metric ton reduction by USDA on their report.
Well, and we talk about that number from AgroConsult, Mike, and we've obviously seen the Brazilian crop shrinking by the day. That number potentially coming in here and confirming that even more for us, and looking at that dwindling supply there. Looking at this correction in the market, I know a lot of producers have maybe watched the chunk come off this core market here the last week or so, and they're starting to get a little concerned. They're nervous. They're upset that they didn't sell maybe or make more sales earlier. What is your thought as we get more of this Brazil story in, and just overall, what is your thought, or what would you tell producers who are maybe looking at that market and maybe getting a little upset, maybe kicking themselves a little bit?
A couple things. I think you're in a learning curve right now if you're a producer that's trying to sell on the way down. You and I have beat this pretty hard, this drum pretty hard about whether you sell on the way up and scale up sell and average your price up, or whether you wait for that high and then try and catch that falling knife. The December corn of this year did what it normally does. Normally, what most commodities do is that went up about 13 or 14 days higher. It ran up $1 in about 13 days. And within 5 days, it had taken that dollar completely away. And if you include today, it's gone more, even down even harder by going below 530. And so we went from 540 to 640, back down to 540 in roughly 2 weeks of time or 3 weeks of time. And so this is where it goes back to the idea that you got to figure out which way you're going to be in terms of selling. And if you do start to see a high put in, you better be quick and get some sales made. I think we'll get a second chance in corn, but we're not out of the woods yet. I think this issue with the corn market being the strongest suit of cards, we got to remember corn's not an island, and these commodities and all these assets trade together. A lot of times the funds that are buying the corn are in an exchange traded fund buying something else or selling another commodity. And so we just got to get that through our heads in this environment we're in, because we're really going to get into some tough situations here in the next couple 3 months because of interest rates and inflation. And we had a brand new one with what happened with the Bitcoin situation on Wednesday. That was in my opinion, Jesse, that was 70 or 75% of why the market sold off, including corn.
Let's talk a little bit more about that. It's not often we talk about Bitcoin on an agricultural market program, but you look at that broad sell-off that was seen in the market. Cryptocurrencies got hit hard. Obviously, that spilled over other equities, crude oil, everything. It was just a hard sell-off day. But talk about how we're seeing things like cryptocurrencies and other areas of the market spill over into commodities more and more. Mike, what are your thoughts on that?
Yeah, I mean, the first thing, the common denominator in the crypto and trying to associate that with a market like corn is not just the investors and the investor class. And I talk to them almost on a daily basis in one way, shape, or form. The other thing is there's a common denominator on what's going on in both the crypto and the corn and grains and livestock markets. And it goes back to China. China decided they were going to come in and really ban crypto in a big, big way. And so if you look at this chart, we've got the cryptos at a whopping $2.2 trillion. Last fall, if memory serves me right, Jesse, that market was only $600 billion. It's more than doubled in just about a year. And so 2.2 trillion is crypto. 900 billion of that 2.2 trillion is Bitcoin alone. That's the one that traders are trading now, and you can get into and out of very, very quickly because the liquidity is increasing. But you see the cryptos are at 2.2 trillion, and you've got gold at 12 trillion. I've been scratching my head why the gold hasn't been going up here in the last 3 months with this inflationary talk. And I think it's because crypto buyers have been taking on crypto instead of gold, and it's been used as a substitute. It's kind of the new inflation hedge. I think that's going to end here. But if you keep following this, the S&P 500 is roughly 38 trillion. But then the big dog is the bonds, $128 trillion. So this is where I come in with the commodity analysis. And I say to my clients, look, if China is banning crypto, they're tightening and clamping down on commodity speculation. They're trying to rev up their coal production again to try and cool prices. That essentially is price controls. Why are they creating these price controls? Because they are fighting this inflationary pressure just like the rest of us, and even more so. And so if inflation gets to the markets enough, that interest rates go high enough, what happens to the bond market? What happens to the equities market? They typically will go down. And that's where these are all related and all correlated. And so that's what I'm watching is, does the Federal Reserve that just got done speaking earlier this afternoon before we went on air, do they ignite inflation, which ignites higher bond yields and interest rates? And does that create a sell-off in the bonds and the equities? And then that spills back over into gold and into cryptos. It's what we call a negative feedback loop and domino effect, essentially.
Well, Mike, other than the corn market on Wednesday, soybeans were down hard. Wheat was down hard as well. Looking at that soy complex, just didn't seem like there was enough news to really keep that soy complex from going lower versus the corn market. We had plenty of news. That soybean complex, though, taking a good hit on Wednesday. But overall, you look at soybeans, still got some good price levels in this market, Mike.
Yeah, I had several clients call today and said, I still got 2020 beans. What do I do with them? And I said, I really would think about selling, because unlike the corn, you are going to face competition and price substitution. And we've got that from China as well. Again, our common denominator is China, whether we're talking about funds or fundamentals. They're talking about switching from soybean oil to palm oil because it's so much cheaper. I believe they will do that. We had their largest pig producer come out this week and tell the market that they have been cutting their soy meal protein rations from roughly an industry average of about 18% to about 9%, essentially cutting them in half. They've been doing that since 2000, but what's new is the Muhan Foods has also said to, and went to Parliament in China and said, we need to do this across the board in China as a national security issue and food security issue. So we are finding ways to get demand lowered in soybeans as Brazil comes online. So I'm of the mindset that the soybean oil really has overdone it at this point. I think we talked about that a little bit last week, and I think this is where the beans are more susceptible to continued liquidation and further waves lower, especially if the crude oil gets caught up in what I was talking about here just a minute ago in the big picture overall market issues.
I know in the wheat market down as well, we got better rain forecast for the northern plains. We'll see how that all helps out with the drought there. And I know as well, we've seen some good precipitation in parts of the central and southern plains, and that Kansas wheat tour is in progress as well. And I know all of that is definitely an influence on this wheat market right now. Anything you are seeing, though, that we need to focus on?
Yeah, good question. I think the first and foremost, if you look at the heat map today of what the gainers and leaders to the upside and leaders to the downside were, wheat was right there with the crude oil and with some of the biggest hit markets. That's not uncommon, Jesse. It typically does take on a macro look to it because of the currency. So in the aftermath of the Federal Reserve talking and the FOMC minutes that were released Wednesday afternoon, I'm going to be watching wheat extra carefully. On that wheat tour, I found it very interesting because they came in their first leg of their tour, I think around a 52 bushel yield. Last year, it was at 46, 47. So it was a big jump, but they made the caveat, and I found this very interesting. They are 3 weeks later on the tour than they were last year. And so not only are they looking at the tillers, they're also looking at the heads. They're able to do head counts as well, and they're getting more accurate representation of what the prospective wheat yield is. So I'll take this quality tour in Kansas a lot more seriously than I normally do, especially with more rain on the way. And if we don't get too much rain and literally drown out some areas, which is possible, then we probably can take maybe at more face value this quality tour yield assessment for the state of Kansas. I would throw on top of that, though, we still saw conditions go down this week. The trade was expecting them to stay the same or get better. So we got to factor in the northern plains, South Dakota, and even parts of Nebraska and Colorado into the mix, because our good to excellent conditions are down versus last year. So Kansas is the biggest wheat production state, but on the number of acres were planted here in this country, which is still relatively low compared to the last 100 years or so, we've got to look at these other states as well. So those are kind of my thoughts right now.
Let's switch to livestock cattle. Not a bad day in cattle. It seemed like maybe that broad sell-off hampered the livestock markets from trading higher than they did, although we did get some decent strength in live and feeder cattle with lower feed prices. We're expecting slaughter to be around 655,000 head this week, which would be an improvement from recent weeks. And we got a cattle on feed report on Friday as well that we're expected to maybe show some numbers, on feed numbers up around 3 to 4% above last year's pandemic level. But as you look at those factors, you look at this market today, was it mainly just the broad sell-off that kind of held down cattle today?
Yeah, I think so. And I think also we had the Central Stockyards Exchange a weekly sale, and it was pretty thin, and it was 119 in Kansas was about the best sale I could find, but it was not good volume. And this is really concerning to me, given the fact we're going into Memorial Day. The Packers should really be ramping up now for their kill on Memorial Day. So when I see markets like this before our first major summer grilling holiday of the summertime, it makes me wonder whether they're not going to feature more aggressively on the retail side, the poultry and the pork, because that tends to be what I see. The one bright spot, and I think it's a big bright spot, especially as we get past June, July, and get maybe into August and on past there, is we have really seen the weights come down. Dressed weights went down another 2 pounds last week. We're now at 826 pounds on a dressed weight basis. Last year, on March 6th, just a couple months ago, we were up at 843 pounds. So we literally lost 2% in the dressed weight number. If you kept your slaughter numbers about the same, that would equate to about 10.5 million pounds a week less of beef production. That's going to add up eventually. So I think that brings the bottom up, or the floor up, in that fat cattle market. I still like hedging August fat cattle around that 124 and a quarter level, and then up to maybe 126, I think maybe is the top end of that market. But I doubt if I'll do any hedges after August because of these weights coming down, and I think the numbers will start to thin out. And that's probably the biggest thing I'll be looking at on the report, is more the placements is going to be more important to me than the on-feed numbers.
Well, another story that I think is influencing our cattle markets as well is the Packer margin story, and all the news surrounding that. And obviously, it's not going to necessarily have a impact directly to price, but I think indirectly, just with all that chatter and some investigations, I think that is in the back of the market's mind as well right now, Mike.
I think you're absolutely right, and I think you throw on top of that Argentina coming in and putting in a beef export ban for 30 days. This should all be good news for the producer prices at the producer level for the fat cattle market. USDA did a really nice job in their livestock, dairy, and poultry update this month, showing how our on-feed numbers for 150 days or more is almost identical to 2019, and yet we're running well below 2019 FI slaughter numbers. What is going to happen, Jesse, in my opinion, is you can play this for a while, but eventually those backed up cattle come to market, and then there's a hole in marketings, and there's nothing you can do about it except go through that hole in marketings. And so what I'm going to start mentally preparing my cattlemen for is kind of a hole in marketings in late summer, early fall. Again, the cattle and feed report is going to help me with that. And give me more insight on that. But if there's a hole in marketings, I'm going to say, I'm not selling anything right now. You come to me, because I think then it becomes much more a seller's market. And I think that's what the Packers are going to have to look forward to by doing what they're doing. If we are all of the same opinion and correct that we are seeing kind of a backed up cattle market for a variety of reasons. USDA did make note that part of the reason that it was backed up was because of labor issues still at processing plants. But with the vaccinations and COVID going down, that should become less and less a factor. So be very ready for a hole in marketings as we get into the fall time period.
Mike, real briefly on the hog market, it seems like a lot of the news has gone away from this hog market, so to speak. We stayed fairly range bound, it seems, lately, and just kind of looking for a reason to move this market higher, or maybe we found our top. It's hard to say. What are you seeing in this hog market here as we work through this week?
Domestically, I think we have probably found the top in terms of what the consumer will take on and what the packer will pay, versus a very tight market ready supply still. But I think that's coming to an end here in the next 30, 45 days. Globally, I think we'll still see some very strong pork export sales. But I would also say China is clamping down on their information. We're not getting as much data on corn and pigs and pork prices as we were getting just a week ago. And so it's getting much more opaque in that area of China. And that's probably going to pull some funds out of the market. And, with the soybeans and what's going on with the soybean oil and some of the other fundamentals that we're starting to learn about, I wonder if that pork and bean trade that the funds have enjoyed running so much maybe is going to start to break apart a little bit. So I wouldn't rely too much, as much on that as I have in the past.
Mike, any other final thoughts or anything you want to reiterate for us here on this Wednesday?
I just love to have some people give me a call and reach out or touch base on the website, globalcomresearch.com, sign up for a trial, or send a note, say, give me a call. I want to talk about some of my specific marketing issues that you and Jesse have hit, because I've been getting more calls like that. It's great to reach out. It doesn't cost a penny. Yes, I'm going to try and get you as a client, but you can always say no, and you can get some free information in between that.
Globalcomresearch.com is where you could find him. You set up for the trial of the newsletter as well, and reach out with a phone call. Mike Zuzolo, appreciate the time as always, my friend. We'll talk to you next week. Thanks.
Thank you, Jesse. Best to everybody.
Mike Zuzolo with Global Commodity Analytics, our guest today here on Market Talk. Find us online, markettalkag.com. This has been the Wednesday, May 19th edition of Market Talk, brought to you by GrowMark FS. I'm Jesse Allen. Have a great afternoon.